Hello, let's complete the lecture Facing Corona Crisis in Peripheral Countries, the Economic Policy and the Political Economy Constraints with Part 4, Currency Hierarchy Implications. So we will come back to the discussions about the economic policy by using the theoretical discussions we made in last video. The implications of currency hierarchy are very wide. Some of them studied in the literature, like original sin. Countries with peripheral currencies, they have to issue external debt in other currencies, so they face the problem of currency mismatch, external constraints. So due to the lack of dollar, many peripheral countries had problems with the imports, with the payment of the external debts in history, and this was studied by Clark, Thero, and so on. But here, obviously, I'll focus again in the economic policy problem, the policy space problem, starting with the exchange rate policy. Due to the potential higher volatility of the capital flows, what we see in peripheral countries is that we have a potentially higher exchange rate as well. This volatility may be controlled, but with costs, obviously, as I'm gonna argue later. And even if there is no volatility of the capital flows, what we see is that we have volatility of the expectations related to the exchange rate, which through the future markets may imply volatility of the exchange rates themselves. Also, we have a higher trade-off. This is valid for all countries, but for peripheral countries mostly, between competitiveness and purchasing power, because the internal prices in peripheral countries are more related to the US dollar. So the volatility of the exchange rate may create pressure over the internal pressure in a higher extent than in other countries. Monetary policy. Precisely whenever we have the control of the exchange rate, normally we do it through the interest rate. So the monetary policy at the end in many countries is totally implied in the effort to contain the exchange rate volatility. So at the end we can have a control of the exchange rate, but with a high volatility in the interest rate, which is also an important problem. Other problem, if you get Keynes' idea that the interest rate is the prime for the illiquidity of an asset, we see that currency, peripheral currencies, since they are illiquid at the international level, in order to be demanded by international investors, they have to pay a higher prime corresponding precisely to this higher illiquidity at the international level. So interest rates tend to be higher in peripheral currencies than in central currencies. And also, this prime is determined exogenously. This is not related. We have the country risk, which may be related to the country itself, but we have this prime for the illiquidity, which I'm claiming that is determined exogenously. It depends on the phase of the international liquidity cycles that we discussed in last video. So whenever we have a boom, an economic boom, we can have a lower prime for the liquidity, so lower interest rates in the periphery. But whenever we have crisis, financial crisis, then we have to pay higher primes, so higher interest rates in the periphery. And summing up, we have a constant effort to contain capital flights in the periphery. Monetary policy is always implied in this effort to contain capital flights. Fiscal policy. This is important for our discussion in the Corona crisis. Many states, they do not have to go into external debt in order to do the anti-cyclical policies. For emergency income, for instance, this is not related to US dollars. They can do it with by issuing money or by issuing internal debt in their own currencies. And technically, a national state cannot default in its own currency. This is true, and this has been argued, and this is very important for us to understand the possibility of using fiscal policy in the current situation. But we have also to understand that fiscal policy is always under the scrutiny of the money managers. okay, and obviously under the scrutiny of the credit rating agencies as well. And this creates problems, not technical problems, but political problems. At the end, this scrutiny of the money managers and the credit rating agencies can have impacts over the long-term interest rates, can have impacts over the creating capital flights, so with pressure over the exchange rate and so on. So my claim here is that we have to go beyond the aspects that would arise from pure theoretical macroeconomic analysis, understanding that in peripheral countries with open financial accounts, obviously this is important, this integration to the financial globalization, which is the vector for the creation of many of those problems. We have to understand those problems in terms of political economy, seeing it beyond the mere technical issues. This is my claim. Final remarks. The hierarchy of the international monetary system creates another asymmetry, which is named by Daniela Prates as the macroeconomic asymmetry. Ocampo goes in the same direction. Actually, we have very different policy spaces in peripheral countries and in central countries, as I tried to show. And please, it does not mean that peripheral countries should refrain from using anti-cyclical policies to combat any crisis, and most of all, to combat this specific crisis. What I'm arguing here is that we do have to rely on strong anti-cyclical policies in this moment, knowing that the threats from the market that are coming, as I tried to show, they are not related to our domestic fundamentals, but they are rather related to the current configuration of the world economy. It's a permanent threat. Okay, so this cannot be solved with the promise and the implementation of austerity every year. It's the contrary. You do have to make fiscal policy. My claim here is that we have to understand that the origin of these problems depend much more on the international political economy and not only in technical macroeconomic analysis. And then the efforts to overcome those problems will be harder to conduct, but probably more efficient. And then we have some possibilities to defend ourselves. For instance, and this is made by some countries, we have to regulate our financial accounts, we have to coordinate the capital account regulation with the macroeconomic policy, we have to have high international reserves, even if they imply a cost as well. So those are manners for us in the periphery to defend ourselves from the implications of the currency hierarchy, from the implications of the potential of the constant threat of capital flights. And then we can do, or at least make our policy space wider. And this is my last claim for the students. We have to move on and deepen the discussions about the international monetary system hierarchy, because it's by seeing it, we see the root of many problems peripheral countries face nowadays and always. I hope you have enjoyed this lecture, and if you have comments or questions, please write to my email address. I'll be happy to be in contact with you. Thank you very much.